Is NVIDIA reversing down? We will look at gold and try to find out if this is a buying opportunity for it. A Bitcoin hit an all-time high. Is there more upside? We'll also look at stocks, which could be topping at least short-term, and at the same time high-yield bonds, junk that hit an all-time high, which is good for stocks. All this and more in today's edition of MasterChartsTrading.com Market Recap for Friday, March 8, 2024. As always, please remember to hit the like button, subscribe to this channel, share this video, make any comments or ask any questions that you like in the comment section. It's indeed what keeps this channel going. Again, thank you for the comments and the likes that's been already coming. If you're a subscriber, stay tuned. We'll cover quite a bit of various securities. You can see it's a pretty busy week this week. We'll cover crude oil, some forex trading, copper, and market breadth in the members only section. Also cover a bunch of various ETFs such as energy, cannabis, mortgage REITs, as well as large cap stocks such as Amgen, Ford, 3M, and Tesla. Also, we'll cover a few of the speculative securities, such as ATAI Biosciences. This is a psychedelic firm, DocuSign, as well as Macy's and a new company, a relatively new company that I'm aware of, Nano Dimensions. Roku looks interesting as well. We will finish off with gold and gold miners at the end. As always, I'll be using my proprietary MasterChartsTrading.com market recap. Market indicators, trading indicators. You can find out more about them by going to in the description of the video. They're on this chart as green, blue, red, and yellow line. They're available for TradingView.com, this interface. TradingView.com is free. All right, let's look at S&P 500. This is S&P 500, the actual index. This is an all-time high that was hit today. I wanted to kind of point out this candle that was printed today. Okay, this is a reversal looking candle. So this pattern from 7th of March and today, the 8th of March. By the way, today is International Women's Day, so I am congratulating all of the women and hoping that you have a wonderful life, and obviously everything that you want to wish for yourself, I wish to you as well. So looking at this chart again, today's candle from March 8th is entirely engulfing this previous candle from March 7th. That's a outside reversal, also known as bearish engulfing. On daily charts, this is a daily chart, meaning that each candlestick is a day's worth of activity. On daily charts, it's not as big of a deal as it is, let's say, on weekly charts. So we can briefly look at the weekly chart, and you can kind of see that it's not really that. It's a giant weekly candlestick. Looks like a spinning top with... Basically, this just means indecision. Where is this going? Well, we can again look at this pattern that I already pointed out. So notice this upside down triangle. So this is a weekly chart. So each candlestick is a week's worth of activity. This upside down triangle is bounded by July 2023 on the left side here. October 2023 the bottom, and the top here in December 2023, and we have a breakout at the mid-December here. You can see it on this chart, and then we just continued higher. So right now the depth of this pattern, this upside down triangle, is about 500 points. We moved that much and then a little bit more after the breakout. So generally speaking, this is the way to estimate the size of the move, and I think we're sort of there. Can we get even higher? It's possible, but just, it's very overbought. Obviously overbought in the bull market is not as big of a deal as, let's say, in a bear market, and we're clearly in a bull market because we're at all-time highs. But, you know, just looking at this chart, notice how far away. I mean, I'm just going to look at this at my blue line. So currently we're about 500 points away from the blue line, and you know, just, you know, let's say back in, I don't know, even January, we're like 7 points away. So we're really overextended now. And, you know, it's quite, I mean, it's possible we'll just grind higher. I've seen those type of patterns in the past. But a pullback is, I mean, I think we're there. We need to see a pullback. There's lots of gaps to fill. There's this gap here between 21st and 22nd of February. There's this gap here between 13th of November and 14th of November. So if we do get a pullback towards the blue line, and this is usually where I would want to consider buying, that's where we're gonna end up probably. I mean, if this is the top, then I'm thinking something of this nature. So maybe into late April we might be pulling back. That's you know, provided we actually have indeed tapped. Have we tapped? That's a really good question. Nobody really knows the answer. If you have a comment, you know, do you think we have tapped? It does look that way, at least for a little while, but there is no guarantee, obviously. Well, also notice that we haven't even touched this green line since November. So at the very least, I think we might just come down to the green line. And it could be a few days or a few weeks. So if we come down to the green line, maybe we're looking at early April, possibly earlier. Again, if we pull back all the way to the blue line, that would be a buying opportunity. We did just that. Notice that we tapped out in July of 2023. We pulled back towards the blue line. We bought it there. I personally bought it there in October of last year, right there. So pull back towards the blue line, close above the blue line, and I buy it there, basically. Nice move. Obviously, very, very happy with my position. So I am up around 20%. I really can't complain. I did sell half my position, so if we start to pull back again, I will consider selling more. But for now, there is a chance that we have indeed tapped out. You're looking at junk debt, so high yield bonds, JNK. Why do I care about high yield bonds? Is because of the correlation. So down below here is a correlation coefficient. How much does the S&P 500 correlate or move together with S&P 500? So it looks like it's very high correlation. So high yield bonds correlate highly. And notice that high yield bonds have indeed finally hit a new 52-week high. Up until recently, we had this divergence where high yield bonds hit 52-week high back in December, but they have not yet hit a new 52 or all-time highs. Whereas S&P just never stopped and never looked back. So finally, high yield bonds have indeed hit a 52-week high, and this is good news for per my understanding. So we'll be kind of getting close. If we haven't yet already done so, because notice that this is an all-time high that was set in 2021, and we're super close to an all-time high. So for now we're 52-week highs, but I mean, if we break to new all-time highs, then I think stocks will actually continue higher as well. So good news, but question is this a top-end candle, on daily chart? I mean, it's a really tiny candle, so we can't really tell if this is indeed the top. I mean, it does look like a shooting star, but like I said, with the way things were going, it looks like stocks just keep going higher and higher no matter what's happening. So we'll see where it goes, but for now we're in an uptrend. We're bullish, we're buying stocks, we're holding our positions. If or when we will reverse the downside, you will be the first to know for sure. Looking at NVIDIA once again, so NVIDIA has blew everybody's expectations, just blew them out of the water. We traded NVIDIA as well here at MasterChess Trading. An alert was sent back in February of 2023 at $217. It just continued higher, and especially this huge run from beginning of this year until possibly now. So looking at this candle, does look like it's a giant bearish engulfing. So I just showed it to you on S&P 500. So a bearish engulfing is when you have a big red candle and a previous candle which is completely engulfed by this big red candle. You can also say that this is an outside reversal, so reversal to the downside. So is this indeed the reversal? It sure looks that way. Additionally, the fact that it's just going in this parabolic manner, it looks like at least a pullback of some sort, or at least sideways action might be in the cards for NVIDIA. And correlations are very high, obviously, so we're going to look at correlation between NVIDIA and S&P 500. So correlations are very high. So NVIDIA is doing the same thing as S&P 500, possibly the other way around. S&P 500 is doing the same thing as NVIDIA. NVIDIA is outperforming S&P 500, but as far as correlations are concerned, they're very similar. They have high degree of doing the same thing. So if we are indeed seeing a outside reversal, bearish engulfing for NVIDIA, then I don't see why S&P will not also move back. For NVIDIA, I mean, at the very least, this green line, but we're almost there. So I think at least towards the blue line, which is right there at about 692. We'll see if it's a buying opportunity or not at that point. But it just looks so overextended that it needs to really correct and kind of catch its breath, so to speak. Switching gears, we're looking at dollar currency index. So I wanted to show gold first before we go to dollar currency index. And gold has indeed broken out to new all-time highs. For several days it's been setting all-time highs. Alert was indeed sent back on December 14th. And if you held on, then you are in good shape, and I would continue holding. So we're now pretty much confirmed that gold is in an uptrend. Notice up arrows. This is exactly how we trade. We look for a pullback towards this blue support resistance line, and we just buy it. But looking at dollar currency index, so dollar is dropping, gold is rallying. This is a normal scenario, normal situation. Gold divided by US dollar. This is normal. The bottom part of this equation, if it gets bigger, it will pull the currency pair lower. But right now, the bottom part of this equation is getting smaller. So in fact, the gold is pulling higher as a result. So dollar has been pulling back towards this red support resistance line, and notice that we're basically trying to bottom right now, right around the red line. So if we do indeed bottom here and try to rally, gold will come under pressure. However, there is a good chance that dollar will just continue collapsing. So in that case, I will be buying gold. I mean, we are buying gold and gold miners. So gold miners were deeply oversold. I will talk about in the members only section, but gold miners were deeply oversold, and that's another reason why I thought, wait a second, why are the gold miners so underperforming relative to gold, and then gold turned around and just made a new high. So right now we're looking for opportunities for to buy miners, gold miners as well. Finally, let's wrap up with Bitcoin. Bitcoin is particularly well suited to be traded with my indicators. So let me just show it to you. First of all, on the weekly charts, and the weekly charts are it just looks just great. I mean, this move is a 158% move. So notice this up arrows here. Okay, on close above the blue line or on pullback towards the blue line. Also notice that since those alerts were sent in May, June, and September of 2023, Bitcoin actually hasn't touched this blue support resistance line on the weekly chart. Okay, notice this is a weekly chart, W. Okay, if you're using my indicators, make sure to switch the length to 52 on weekly charts. On daily charts, you can keep the length as 250. So on daily charts, see, I actually bought it back here in August and also in October, and I rode it all the way until January 23rd, 2024, just a few weeks ago. And notice this is my signal to sell it right there. But then next day it just turned around and continued higher. It was a new huge move. So if you have my indicators and you bought it here back in January, congratulations. However, if you were just trading on weekly charts, meaning that you only make decisions on Fridays. Okay, and if you did that, you would be in 140% gain already, or even more actually, 158% gain since the alerts back in June and September. So congratulations if you are still open. If you're not open, I would wait for a pullback at least towards the blue line, so something of this nature. So right now we're at what, 66,000 or so. If we pull back towards like 53,000, then I think I would be buying it here. But right now it's just too overextended. That's it for this week's recap. Let me know if you have any questions. Head over to masterchartstrading.com, click on sign up for one of the products. So I added the monthly, or rather yearly subscriptions. So it was a little bit confusing here, but basically if you buy upfront for a year at $599, $599.95 per year, it would be equivalent of $49.95 per month. If you're buying month to month, it will be $59.95 per month for newsletters and indicators. It's that simple. If you want to just get the trading indicators, you can pretty much trade anything you want. You can just get that, and if you get a yearly subscription, it's $299 per year, which is equivalent to $24.95 per month, which is a nice 17% discount. The same for newsletters. So newsletters are I send out various alerts about various securities we trade, that I open positions, and that I would be considering open positions as well. So notice that there's quite a bit of stocks that we'll be covering this week. And of course, the best deal is to get both trading indicators and newsletters. Best deal, of course, is to get the yearly, $599.95 per year, or equivalent of $49.95 per month, compared to $59.95 per month with a monthly subscription. Did that make sense? Let me know if you have any questions. Thank you for watching, and have another great trading week. Bye-bye.